Hey everyone, this is James Pelton. I am here today with Steve Lawson. He is someone I met at the 1971 Fake Money Experience, which actually is going to be meeting again here in a month or two. And we'll have more details about that, but would love to meet up with as many of you in person as can. You connect in person just in a different way than you do over Telegram or Discord or even the videos or anything like that. So might be able to meet you in person there, but I was able to meet Steve. And Steve comes from, well, I'll let him introduce himself here in a minute, but he comes from traditional finance. Okay, so he has a lot of skills that I think we need to transfer over into DeFi. So a lot of us in DeFi, we're not very good at planning and things like that. So that was one thing that really stood out to me about Steve is he takes kind of some of the planning aspects and risk management aspects of traditional finance and moves them over into our crazy world of DeFi and crypto and all the craziness that we have going on. So if you're in the audience, please hit the like button as we're getting going. Really appreciate that. If you have questions or skepticisms or anything you want to talk about along the way, let us know. We'll bring those up. But Steve, thank you so much for joining us here again. Can you start us out for people who might have missed the last video we had with you? Can you start us out with a quick introduction and then we'll jump into today's topic?
Sure. So quick background. I was a financial planner for about 10 years back in the late 90s and early 2000s and did stocks, bonds, funds, basically just helping people try and grow their portfolio and generate their income as conservatively as possible. And then in 2002, I realized, I think there's a better way. And I'd seen after 10 years, a lot of people just hadn't made the progress that I would have thought they would have made. And I liked real estate. And I was like, you know what? I think that's way better for most investors. So I gave up all my licenses and switched over to helping people invest in real estate instead. And so I did that for most of the next 15 years. I did a couple hundred flips, helped my investors acquire over 500 properties during that time. And again, I still love real estate. But then about 3-4 years ago, I started looking at my own portfolio. And again, talk about being a financial planner part is that's not diversified. I had about 95% of my assets in real estate and realized, man, I need more diversification. And not only did I want diversification, but I wanted passive cash flow. I had a couple of kids who were about 4 years from going to college, and I wanted to be able to pay for that college with nothing but passive cash flow. So that's when I started branching out and looking at other alternatives other than the stock market, other than real estate, things that weren't tied to those that would generate that passive cash flow. And what I found, it took a while. The first 6 to 12 months, I didn't find much of anything. But then I found a little bit, and then I found more, and then it just like a tree, just kind of kept branching out, and this led to this, and it just kind of kept building and building, and it helped me generate a large amount of passive cash flow over the last 4 years. So that's kind of how I got to where I am today. And what I did with that is I ended up starting about a year and a half ago, training people, coaching them to do what I had done. And so I initially started it just doing it one-on-one. It took about 12 one-hour sessions. I had to do a lot of education, information. Here's how this works. Here's how this works. And now, all right, let's look at your plan. And then I turned it into a course at the very beginning of this year. And I've been doing that as a course for about 8 months now. And so what happens is there's a handful of videos. They watch the videos, learn some of the concepts that I was teaching. And then we have weekly group calls where we discuss it and one-on-one calls where we implement it and get the results. And so that's what I've been doing. And what kept coming up is when we got to module 3 of 4, that's the planning part. And it's so hard for most people to just start to create a plan. It's like creating something out of thin air, and it's just difficult. But if you can start with a plan that's already there and say, okay, I see that, but I don't like this piece. All right, let's change that. Let's change this. It's a lot easier to change something than to just create something from scratch. And so that's really what motivated me to create, the model of how do I retire now on $100,000? Because then we can adapt that. If you need more, you need less, you need more time, we can change that. But at least you've got a starting model for what to do, how to create that passive cash flow. So that's kind of how this all came together.
Okay. Very cool. Well, a couple things I would like to talk about just about and I know you can't give us all the secret sauce, but maybe we'll just talk a little bit about. So first off, is it a realistic thing for someone who has $100,000 to say, hey, I can retire now? And I guess it depends what age you're at, but is that a realistic thing for people?
Absolutely. And again, the income that this would provide, it'd be about $5,000 a month. So if you can survive on $5,000 a month, then yes. If you say, no, I need 10,000, well, then probably not yet anyway. And so that actually leads me to kind of three things that I usually share before I get into the model. Okay. The first one is be skeptical. A lot of people's like, well, can you really do that? And the answer is, what I tell people is yes, but be skeptical. Make me prove it. And I tell people, you've got to have a little bit of, you can't have too much fear, but you also can't have too much greed. And so, that kind of, all right, be skeptical. I'm going to be a little hesitant, but at the same time, don't sit there and do nothing. Don't be afraid. So just listen with an open mind. The second one is don't say that can't be done. Okay. That's one of my least favorite things. Oh, you can't do that. I'm already doing it. I've already done it. I've got dozens of clients who have done it, and there's people who've done it outside of my sphere of influence. So, when I hear people say, well, that can't be done, like, how do you say that about something that has already been done? That's one of the other ones. And then another thing I like to go over is, I said, like, it's a model, but you can modify it. So if you say, well, gosh, I can't do that. I need 10,000 a month. Okay. You've got a model for how to do it on 5,000 a month. Maybe you don't retire on day one. Maybe you let it go for a year, then retire. Or maybe you've got more than 100,000 of assets. Maybe you've got, there's just all sorts of variables. And so don't just think it's like, well, gosh, I don't have 100,000. I can't do that. Well, okay. Understand the plan and go from there. Now, actually, there is one more principle, and that is, I want to talk about geese. So many people think of investing as buy low and sell high. I'm going to buy that, and I'm going to find that magic stock, that magic fund. And if you time it just right and you buy the right stock on the right day, and then you sell it on the right day, you can make money if it goes up. Same thing with gold, same thing with crypto. And you're dependent on just sitting there hoping it goes up and that you bought at the right time, you sell at the right time, and you even have the right assets. Okay. Instead, think of investing as buying geese that lay golden eggs. Okay. When you buy a goose that lays a golden egg, you get that golden egg every day. And yeah, sure, the price of gold may go up or down a little bit, but the next day you get another piece. The next day you get another piece. Don't think about, well, I'm going to buy a goose and then I'm going to turn around and try and sell the goose for more money down the road. That's not what you're buying the goose for. You're buying it for the golden eggs. And the whole key to this program is understanding that and saying, well, I'll tell you what, I don't want one golden goose. Maybe there's this goose that lays a golden egg every Saturday morning. Great. But here's another goose that lays smaller eggs every day. And here's another goose that's going to live for 25 years, but they only lay one egg a month. And here's another goose. And so you keep building this flock of geese that lay golden eggs so that you've always got eggs coming in. That's how you build passive cash flow. That's how you build wealth with that type of diversification. And just try and get over the buy low, sell high mantra that drives so many people to the stock market and other assets.
Okay, very good. No, I love that. I love a few things that you said. First off, just that balance, which can be difficult to find, especially in the crypto space, but you want to be skeptical. So you don't want to just look at every single thing and say, like, and no offense to this person if you're watching right now, but I have someone on Discord who's told me, hey, I found this opportunity. It makes 5% a day. Let's get into that. And I told him, hey, no, I'm skeptical. 5% a day, it's too much. I'm skeptical of that. But then you don't want to go too far that way. There's some people who are skeptical of every single thing where they won't even do anything. They're like, you know what? I'm just going to keep my money under my mattress because every single investment opportunity out there is a scam. Everything, there's no way to actually make passive income. There's no investments that are worth it. And then you end up getting eaten up by inflation and opportunity costs and other things like that. So there's like a balance to be found there.
Sorry. Yeah. Fear and greed. It's exactly it. Afraid of moving forward and greed trying to get too much. If you avoid those two emotions, you can make a lot better decisions with your money. Yeah.
Yeah, nope, absolutely true. And I love cash flow investing. Like you said, I'm not good at timing things, buying, like I'm holding on to a whole bunch of Ripple. And, Ripple went up and I probably should have taken some profit up there and then I could have re-entered lower, but I'm not good at watching the markets and getting in at highs and down at lows. So I prefer more cash flow investments where then, okay, now I just have more money and I can just dollar cost average in to Ripple or Bitcoin or something like that. I don't have to worry too much about the price. So I'm with you on that as well. Let's see. Scott says 5% a month off of 100K. I'm not sure. I believe 80% APY is possible or reliable. And then K Soon says the same thing. Where are these geese hiding? So do you want to talk with us a little bit about how you would kind of structure things if you had 100K and we're looking to get that 5K a month?
Sure. So think of it this way. We use 6 different markets. Okay. And so, most common stock market. That's actually the lowest return of the 6. So we use it as kind of a last resort, but that is one of the 6. Another one is real estate. I love real estate. It's been fantastic. It's created, it's one of the 2 things that's created the most billionaires in history. But right now, prices are a bit high, interest rates are a bit high. And so what is my old saying? Cash flow. Right now, the cash flow is not there. And so if you find a great opportunity, great, but it's just harder to find a good real estate right now. But that's one of the 6. Another one of them is agriculture. And this is one of my favorites. It's not tied to the stock market. It's not tied to interest rates, and it benefits by inflation. And I tell people, look back at 2022. What happened when that inflation jumped up really high? Stock market went down 20 to 30%, and crypto dropped 70%. Real estate was pretty flat. And what happened to all my agriculture? The cash flow is based on the price of the food. It went up. All my agriculture cash flow went up at least 10% in 2022 because it went up with inflation. And so I've got cash flow coming in from mangoes and oranges and avocados and walnuts and coffee and chocolate. People keep eating. People keep drinking the coffee every morning, and they're paying more for it. And I thank you. But it's a different market, but that's the type of thing you need in your portfolio. Another market we work in is businesses. And again, that's the other market that's created the most billionaires. Again, they didn't buy low and sell high. They bought or created something that had cash flow. Now, I'm not saying go run a business. We have different ways that we create cash flow with a third-party management company, just like you would with real estate. You buy a house, you hire a property management company and let them do the work. I show people how to buy businesses. You hire a manager, let them do the work, and you get the cash flow. And so that's actually been one of the best cash flowing assets in our portfolio are several of those cash flowing businesses. And a lot of them, they're digital businesses. So you don't have to worry about, employees. You're not worried about, storefronts and, my rent went up and my insurance and all that. You don't have any of those issues. And so that's been a really good market for us. And then we have a couple others. We invest in notes. And think about that's what banks invest in. If you've ever had a mortgage, if you had it for any length of time, your bank probably sold it to somebody else. So, hey, I got a mortgage with US Bank and I paid that mortgage for 2 years and then they sold it to ABC Corp or whatever. Okay. And this is because people buy and sell mortgages all the time. You can do the same. And we show people how to do that so that you're making 10 to 15% per year secured by real estate. But that is as passive as it gets. You just get a direct deposit into your bank account once a month for the next 29 and a half years. Great cash flow. And so that's one of our markets that we utilize. And then the last one is the one you're familiar with the most, digital assets. And it's a great part of that portfolio. It generates a lot of the current cash flow while other things are building and growing. Okay. And so the longer you can wait until you essentially retire. So in other words, if you start today, you're going to have to use some of that cash flow from digital assets to pay your current income, right? But if you can wait 6 months or a year, then you can use that to just buy more of those longer term assets, more digital businesses, more agriculture, more notes, more real estate. so that you're set up for long term, because different types of different assets have different cash flow. Digital assets, that's short term. You know, it's going to last 6 months, a year, 2 years, who knows? I'll go into that more in a minute. But you know, the agriculture, minimum of 25 years. Okay, some of them are set up for 40, and some of them are set up for lifetime. Okay, real estate, as long as you maintain it, it's not going to disappear. You can have that till the day you die. And so there's certain ways you can structure these so that they last a long time. But I will tell you that digital assets are the short-term one, but it's also the highest return that can then fund the rest of those.
Okay, and then so I think sometimes too, if people are talking about retiring, right? Then they get concerned because, you know, like if we're relying on our DeFi investments, for example, some people were making a lot of money in the bull market, then the bear market came, and now they're not making money, and they get concerned, thinking, "Oh, I retire, and then some of my investments don't work out, and now I'm without a job. I don't have the cash flow anymore because my investments fell apart." How do you think about like safety in regards to this, and you know, and quitting your job and those types of things? How do you work that all together in your mind?
Sure, several factors there. You know, one is obviously age. So if you know, if you're to the point where, hey, I'm 65 years old and I want to retire, and I've got X dollars, and I'm going to put it all in digital assets and retire on that, then that's not a good plan. um, that might last 3 months, that might last 2 years, but that's not going to last your lifetime. Okay, you need those long-term assets that'll continue to produce year after year, decade after decade. The problem is, if you try and retire off just those, you're not going to have enough money. So you go out there and say, hey, I've got $100,000. I'm going to buy notes, for example. Well, that's great. Now you've got $1,500 a month coming in for the next 30 years, but that's it. You know, and so you've got to have that balance of some assets that are going to be around for decades with some that are going to generate higher return over a short period. And so, so from a retirement standpoint, obviously, the older you are, you need, the more important it is to have those long-term assets in place. Now, if you're 28 and you're saying, you know what, I'm going to retire, and you do some of the long-term, and you've got a lot of it based on the short-term, and you're like, you know what, I'm tired of my boss, I'm sick of this, I'm just going to retire. And you know what, I hate to say it, but if it doesn't work after 2 years and you pick the wrong digital assets, okay, you go back to work for a while, or maybe you're working, you know, part-time from home, maybe on the road. You know, maybe you've got a virtual job you can do to supplement the income, things like that. But you've got to have those long-term assets to provide that long-term stability. Now, when I talk about the short-term assets, the digital assets, diversification is super important. When we show people how to do this, a lot of the times, as much as 50% of the assets may go into digital assets, okay, DeFi space, whatever you want to call it. But if you're not in at least 5, preferably 10 projects, then you're not well diversified enough. Okay, you can't be too dependent on 1 or 2 or even 3 or 4. And I tell people 5 is too few. I'll tell you, I'm in more than 20. And so far, we've got nearly a 90% success rate. Yes, there are some that have still had issues and disappeared, but we have a very rigorous checklist with every project. I need to know who's in charge. Is there a real human that I can talk to that is running this venture? If not, it's too risky. Do I know how they're making their money, and can they prove it? Oh yeah, we do this magical thing over here with pixies and whatever, and we're generating 5% a day. Great, can you show me? Well, no, doesn't pass the test. You know, that's just 2 of the 8 tests that we perform our due diligence on each of these projects. And if something passes all 8 of those, it's a pretty solid project. And is it perfect? No, but if you do use those criteria and you're diversified across 10 different ones, you're in pretty good shape.
Okay. All right. Awesome. In case this is good stuff. So, you know, knowledge bombs that I think are really helpful for people. Let's see a few questions. What people are asking about some of the specifics when it comes to, you know, my audience is mostly they're interested in the digital assets. Which ones are you excited about right now?
Trying to figure out how many of them am I allowed to name?
Totally up to you, whatever you're comfortable with.
I will tell you this, and I'll tell you why. My very favorite is called the Marathon Fund. marathon project, money for the long run. And I say it's my favorite because I found a partner and we created it. There were too many out there that I didn't like. And I'm like, we know we can make money this way. Why is it? It shouldn't be this hard. And so it is an absolute zero Ponzi from day one. The problem I found with a lot of these funds is that it's expensive to start up a fund. And so what happens is you've got to pay the developers, you've got to pay this software, the website, the DApp, all these different things. And what happens with a lot of these funds is the founders will then use the first dollars to pay themselves back all those startup costs. So $100,000 goes into the fund, and the startup costs were $30,000. There's only $70,000 working there. So if those people, and maybe there's a commission involved, it may be even less. But then those investors want their money back. It's not all there. And so ours, unfortunately, there's no commission. But at the same time, every dollar that goes in goes to work for you. I paid all the startup costs out of my pocket. There's nothing taken from the fund. It's dollar for dollar. What you put in is what goes to work for you. It doesn't pay a fixed percent. It pays on actual returns. So you don't have to worry about, it's like, oh, they're paying too high and they didn't make enough. Nope. What gets paid, what gets earned is what gets paid out. No more, no less. So, and that's the type of project that I like. There are others that are very similar to that I guess were kind of my inspiration, if you will, for creating it. And there's some of these you may have seen. Green Figures is one. I think Delta Ventures is one. That's a couple of examples, but I'm in about 10 of them that are like that, where it's dollar for dollar. You see every trade. It's transparent. You know how the money's made. You know how much is in the fund, how much was withdrawn. I mean, it's all transparent, and that's what I like.
Okay, very good. Love it. Let's see. What are his long-term assets in his portfolio that grow at 20 to 50% per year?
So, trying to do the math on 20 to 50%. Agriculture has been one of the best, and so a lot of those you say 20 to 50, those are barely in the 20% range. There is one right now. They're getting ready to change their pricing model, but they're still charging the same amount for investors right now that they were 2 years ago. And to give an example, the examples back then were based on selling these it's mangoes, selling them at $2 a kilo. And at $2 a kilo, if the price never went up above that, then your 25-year average was about 19% per year. Pretty good. The thing is, the current prices are already over $5 a kilo. And so even if it never goes up again, your 25-year average is about 47% per year in cash flow. And so that's if it never goes up again. Now, they've realized this recently, and they're getting ready to adjust their prices for investors, but there's a window where you can get in at the same price that I paid almost 2 years ago. And you can pay that price, but get your cash flow for the next 25 years based on current and, again, future prices of mangoes. So that's just one example. But yeah, agriculture is one that really goes up strong over time.
Okay. And we do have some more audience questions. So audience, bring up your questions for Steve. Again, he has traditional financial planning along with crypto. So I find that that's pretty unique. Scott wants to know, maybe before we get to questions and answers, does Steve help with setting up these options for people?
Absolutely. And that's what the course does. The first part of the course, I'll talk about it real quick. It's 4 modules. First one, it's education. It's getting in mindset. Again, I keep, we go back to the golden goose. I got to kind of drill it into people. You want cash flow. We talk about that and a few other things. Second one, we get into the different markets, understanding the pros and cons of those 6 different markets I mentioned. The third one is the plan. This is where you create your plan of exactly, hey, I'm going to start here. I'm going to start with these 2 or 3 or 5 things. I'm going to add this in 3 months and 6 months, and you create that plan. And then module 4, that's the implementation. And during the entire time, we have weekly calls that are live. You can get on. You can ask any questions you want. You can hear the questions that other course participants may have. And you also get one-on-one time with me. And that's, the implementation. We'll go over the plan. We'll look, all right, here's exactly what your plan is. Let's go through it. Let's make sure that you've gotten everything. Do I need to introduce you to the guy at the mango company? Do I need to do whatever I need to do to connect you so that you can make these specific investments? So yes, I help people set up, again, the very specific investments in each of those markets.
Okay, very good. So yeah, I left a link for that, the Financial Freedom Fast Track. So again, Steve will help you through some of the planning stuff. We'll help you get access to some of these. And again, these are very different type of investments than I traditionally bring onto my channel. And Steve, maybe I'll shoot you an email, but maybe we can talk more about me presenting some more of these, because these are kind of safer, more traditional investments. And so yeah, we'll talk more about potentially bringing those on. And we have a whole bunch of questions about marathon. Now that you mentioned that, that's where a lot of questions are. What are the range of returns in marathon?
I'd love to say we're going to make 10% a day, but that's not the way it works. Actually, about the target is 14 to 18% per month. I think we can hit 20, but just being conservative, aiming for about 14 to 18.
Okay, and then where do you find Marathon Fun? Is there a website?
It's actually marathonproject.io. So.
Okay, so yeah, you can go check that out. And again, I'm sure that in the training course, you really talk people through that and walk through that. And maybe sometime we can do a video just about that, because there's a lot of times people watch me just for project ideas,
Sure.
So yeah, maybe we can do another video about that.
Well, and one thing is I'll tell you in the course, again, I talk about diversification. Another little analogy that I use is I said the goal is 10 by 10. And what I mean by that is to try and think of getting 10 digital assets wide, 10 different projects, and then eventually getting 10,000 into each. And so maybe you start off say, well, I don't have 100. That's fine. And again, this is just for the digital asset piece of your portfolio. Whatever you have, divide that by 10, and maybe it's 1,000 in each of 10 different ones. Maybe it's 2,000 in 10 different ones. But you start off with that much diversification. And if you properly do your due diligence and filter those 10 and you get into 10 good ones, then they're going to be around for a while. Now, are they going to be around forever? No. But when you're in 10 of them, what happens is if you have a bad month and, okay, project number 3, we did all the due diligence we could, but it just, they did some bad trading, disappeared. That sucks. But you've got enough gains from the other 9 that you can replace it. And all right, let's add project number 11. 3's gone. We added 11. You're still back at 10. Okay. Does that make sense?
Yeah.
So that's why I try and show people how to do that. Think that way from a diversification standpoint within digital assets.
Okay. Very good. All right. Well, this audience, you guys have any more questions for anybody else have questions that they want to ask Steve before we let him go? I've been trying to keep my live videos to 30 minutes or less if possible. Oh, Steve's got something for us here.
No, I'm sorry. I just realized my battery was about 2 minutes from dying.
Oh,
I'm going to shut you off.
Yeah, no, good. Glad we got that. Scott says this sounds amazing. Can we get access to the mango thing and other? I think he means agro and not afro, but
it's okay.
That's all in the course as well?
It's all in the course. And again, you can reach out to me, and that is available for the next 2 to 3 weeks. That's old pricing before they move on to the new pricing. So I'm assuming you've got a way to reach out to me. I don't know if there's a link at the bottom, James, or however you want to do that. That's up to you.
Yeah. Yep, for sure. Is this a good email for you?
Absolutely. Yep.
Okay. So I'll put that email address. So yeah, you can either join the course, or if you just want to shoot him an email, perhaps he might be able to give you some details on that. So yeah, there's a lot of cool investments out there. So I want to thank audience. You guys are amazing. Appreciate you guys. Please keep commenting questions. Even if you're watching this as a replay, we'll try to go back. And Steve, maybe you too, we can go back through and just make sure we get people's questions answered. Okay. Steve, appreciate your knowledge base. And I love when I'm able to connect with people whose knowledge base is a little different than mine, because then I think, we can just give extra value. So really appreciate you coming on, sharing some knowledge with us here today.
My pleasure.
Do you have any final words for us here before we wrap up?
No, nothing in particular. I'll say one thing. I love when people go through the course. For people that want help, they want a plan, they want a little hand holding. That's what that's for. For people who say, you know what, I don't want any of that. Just give me the mangoes and that's all I want. That's fine too. I work with, everyone's a little bit different. And so depending on what your situation is, reach out and be happy to accommodate either way.
Okay, very good. Thank you, Steve. Appreciate you just providing value. So,
My pleasure.
audience, you're awesome. Steve, you're amazing. Thank you so much for hopping on. Appreciate all you guys and hope everybody has a great rest of their day.
All right. Thanks, James.
Thanks so much, Steve.
All right.